Hi, how's it going everyone? Now, if you're on this channel, you're probably looking for some investment advice to help you make some money. And you might also have the idea that the stock market is a quick and efficient way of making you money. But today I'm going to tell you why it's extremely difficult to make money on the stock market and what you can do about it. One of the main things to note is that the stock market is not the economy. And one of the best analogies is of a person walking a little dog on a leash. So think of the person as the economy and the stock market as the little dog on a leash running around. So the little dog may run up and down all along the side path, while the person is walking towards a single direction. Now, the economy might be going up, whereas the stock market itself may be going up or it might be going down at the same time. But overall, the stock market will follow the economy in its general direction, but not always at the same time. What the stock market really is basically a giant collection of individual predictions of what companies are going to do in the future. Over the last 3 months over the lockdown, the stock market has been slowly but consistently trending upwards. And there are 3 factors that contribute to this trend. The first factor is that there are some analysts that are predicting a V-shaped recovery for the economy. Much like the stock market drop at the end of 2018, they are predicting a V-shaped recovery so that the economy will basically go back to its previous highs towards either the end of the year or early next year. These analysts have basically resigned that the second and third quarter earnings of a lot of these companies will be completely terrible. So they basically factor in the bad earnings already before it actually happened. The second factor is that governments around the world have essentially been printing out endless amounts of money to prop up the big businesses, while a lot of the small businesses are left to suffer. Big companies such as Facebook, Amazon, Apple, Netflix, Google, and Microsoft accounts for almost 20% of the S&P 500 in the US market. Due to their online nature, they are the ones that have been least affected by the lockdown over the past couple of months. All of the government stimulus is really crazy when you actually think about what they are actually doing. Essentially, this is like me going into my future and taking my future paycheck back to today and buying food today with my future paycheck. Now, there is absolutely no way that I could do that. However, when a government does it, it's completely justifiable. The third factor is the fear of missing out. And there are many retail investors that see the market that keeps on going upwards, and they really want to get back into the market again because they see that the market will just keep on going upwards again. However, I will show you how disconnected the stock market is to the economy using New Zealand examples. First off, let's look at the New Zealand Top 50 ETF. Now, since the announcement of Level 3, which happened around here, the New Zealand Top 50 has basically been bouncing around a range and while slowly trending upwards within the last couple of days. If we bring up the Fibonacci retracement for the New Zealand Top 50 and draw all the way to the recent low in March, we can see that the New Zealand Top 50 price range has broken above the 61.8% range, which indicates that it is currently back into a bull trend. If we draw out how much the market has actually recovered since the bottom in March, we can see that the market has recovered around 36% from the recent bottom. This 36% recovery has been quite remarkable considering that the country has been in lockdown for such a long time. But now let's have a look at a couple of companies that have been seriously affected by all of the lockdown that's been happening. Let's now have a look at a chart for Air New Zealand. Now, back in March and early April, the Air New Zealand share price has dropped down to around $0.84 per share at its lowest. And since then, over the past around 2 months or so, Air New Zealand has recovered its price back to $1.61. And that's about a 90% increase from its very lows. And they are doing this without actually really having any flights that have been flying around all this lockdown time. Their share price increased by almost 90% around when there are no flights going on. This is why the market doesn't really make any sense. Now let's have a look at the chart for Auckland International Airport. Back in March, 23rd of March, when the level 4 lockdown was first announced, Auckland International Airport had its lowest share price at around $4.40. Now since then, they have recovered all the way back to $7, which is a massive 58% increase over the past 2.5 months. So Air New Zealand and Auckland International Airport has both had rather incredible recoveries, while not really having any flights going in and out, which doesn't really make much sense again. Now let's have a look at a third example, which is Tourism Holdings Limited. Now Tourism Holdings Limited also reached their lowest bottom at around when the level 4 lockdown was first announced, which is around the 24th of March. Now since then, it has recovered just absolutely incredibly well. As of today, they have recovered more than 250% since the low of the lockdown. Now, this not only is this remarkable, it doesn't actually really make any sense either, because Tourism Holdings Limited have slashed staff by a lot. Like just they cut so much staff, but overall their share price just keeps on increasing. Now overall, they did receive a nice stimulus from the government, which occurred around May 14th. So that is the point where they received the stimulus. However, their share prices actually decreased after they received the stimulus, and then massively increased again. So this is just something that is really, really unpredictable. Let's now have a look at a company that has been operating consistently throughout the lockdown and has been consistently achieving a profit, which is A2 Milk Company. So when the lockdown was first announced, which is around 23rd of March, and since then, they didn't even have a low around that time. And since then, till now, the share price of A2 Milk has increased by 18%. And this is significantly less than the massive increase by the tourism industry companies, which should have been the companies that are most affected by all of this lockdown. Yet they showed like much more increase than a company that has currently still achieving profit. Let's now have a look at the charts for another sector, which is the property sector. An example here would be the Kiwi Property Group. Now, from its lows in the same time, around 23rd of March, till recently, as of today, they have recovered more than 48% from the lows in March. And this is all when a lot of commercial properties have not really been operating, and a lot of them might be late on their rental payments. But the point that I'm trying to make is that the market is irrational during the short term, and you can never exactly predict what is going to happen. So if I were to go back to the Tourism Holdings chart, how could you be certain that the share price will keep on going up, even though that it's been consistently going up for the past 2 weeks or so, considering the numbers that relate to tourism is significantly less. They're getting less tourists, more people losing their jobs. And how can you possibly know that that's going to happen? Like that the price is going to keep on going up? And the point of this is that you can never be completely sure. So you always want to have a kind of a long-term view for all your investing choices. And this is why I consistently advocate value investing and buying companies at lower price than their expected value, to avoid being very confused in a situation like this. If you're interested in how to find value companies to invest in for the long term, be sure to check out my other videos on value investing and how to find a good company. And as always, I will see you in the next video.